Hi everybody, I'm Steve McGregor, Business Development Director for Tavistock Wealth. I'm delighted to be joined today by James Peel, Tavistock Wealth's Portfolio Manager for ESG. James, hello, how are you?
Good morning, I'm really good, thank you. Steve, how are you?
Yeah, good, thank you. Thanks for joining me today, taking time out of your day, do appreciate it. ESG is a really hot topic at the moment in the industry, something that advisors are always talking to me about. So I thought it'd be really helpful if we could just run through what ESG means to us, how we incorporate ESG into the Acumen portfolios and our investment proposition as a whole. So I guess first and foremost, nice easy one for starters. What is ESG?
I think it can be a confusing word because it can be interchanged, and so it's best really to emphasize that it is not really anything new. It is just good risk management. It's good fund management, which is why even though we have ESG themed products, we also incorporate ESG analysis into the rest of our proposition, just because it's good fund management. It's a focus on prudent risk management, identifying controversy, and attempting to mitigate at least our exposure to it. So I suppose the best way to see ESG is it is good fund management with a little bit on top, which is really doing good. People use the words ethical, responsible, and sustainable, but really it is just prioritizing leaders measured by a variety of ESG data, and also the companies, the pure play companies involved in the transition to a more sustainability minded planet, renewable energy, stuff like that. So it's not scary. It really is I think quite simple.
Yeah, and I guess in its simplest form, ESG stands for environmental, social, governance. And so all those things that you've just spoken about, doing things correctly on a number of different levels. And I think you've just answered the next question that I had in mind. But why should we be considering it? Why ESG? Why as investment managers? Why as financial advisors? And importantly, why as the end client should we consider environmental, social, and governance factors when investing?
So going down the same order I just used to answer your previous question, from a good fund management point of view, there is strong evidence, both our internal analysis, also externally, that are focused on ESG, the combination of good fund management and our prioritization of those companies more involved in the transition to a sustainability minded planet, the companies that are thinking about the future rather than the past. That seems logical. We should want to place emphasis on those sorts of companies and those sectors, and the governments, the countries as well. So to the point, focusing on those sorts of asset classes and assets leads to outperformance. Internally, we calculate outperformance or a performance comparison for 17 asset classes each day to see how ESG as an ecosystem is performing versus a vanilla basket of in this case indices, through the ups and downs of market movements throughout the year. And in 2020 thus far, our performance in aggregate, in average, is about 3-4% per asset class, which is very meaningful. So that's the first reason I think to focus on ESG from the performance point of view. Similar to that is the risk management point of view. It's a combination of policy change and societal pressure. Regulation is increasingly moving towards a system where, in addition to financial accounting, etc., there is increasingly a demand for sustainability disclosure. And so a focus on ESG before it becomes required, embracing this new normal from a risk management point of view, and publishing data metrics on our products, our proposition, I think is a really good idea. And then lastly, from the doing good point of view, I mean, have you seen David Attenborough's recent autobiography released in video and in book form, or Ron Frick Samsara, like just really a display of, because I've been working from home for so long that you kind of forget that there is a world outside from an environmental point of view, but also from a social point of view that is in need of progress, change, etc. And a focus on ESG is really just an appreciation for the fact that this is a planet that is hopefully moving in the right direction.
That's really interesting, thank you. And there are loads of different factors then to consider, aren't they, when answering the why ESG question. Specifically looking at the way that we do it within Tavistock Wealth, as everybody watching this will know, we invest into ETFs, exchange traded funds. They're the building blocks for all of our Acumen portfolios, for our protection portfolios. Does that present certain challenges when using ETFs, when using index tracking instruments, in screening for and building ESG funds, or using ESG focused ETFs within portfolios? Are there certain factors there that we need to consider rather than picking green stocks, for want of a much better expression?
So I suppose that leads nicely on to explaining our investment policy as it pertains to ESG. And the immediate challenge is that because we invest in ETFs, we are essentially a second derivative of the underlying equity security or bond, etc., because those bonds or equity securities are in a basket that is an ETF or index. We then invest in the ETF or index. So we are, a few steps removed from anything that can be done on a company or bond issuance level from an ESG point of view. So we have to appreciate that reality when building or constructing an investment universe for not only our ESG labeled products, but the proposition more generally. So the way that we achieve that is through our ESG investment policy, which is basically a 3-step policy designed to match an evolving best-in-class standard for ESG with the reality of trying to construct a multi-asset, fully diversified portfolio, from a risk management point of view. And so we rely rather heavily on MSCI data analytics. We concluded after a period of analysis that their solution was most attuned to our needs. Their focus on fund metrics rather than underlying company metrics was useful because we invest in ETFs. And so we were then able to set out a 3-step investment policy requiring the fund and the underlying basket to meet certain thresholds for then us to arrive at what is a superior product from an ESG point of view versus the non-ESG part of the Tavistock Wealth proposition. And that is a focus on a rating system, ensuring that the basket was actually analyzed at the underlying level, so that not just a few companies within an ETF were on MSCI's universe of analyzed companies. And then after doing that, we then were able to screen out those that pass those 2 thresholds for involvement in certain ESG unfriendly sectors.
That's helpful to know, thank you. And that investment policy is published on our Tavistock Wealth Library page. It's on our website. Everybody watching this, I would urge you to go ahead and read that. And we've also put together a really interesting and useful document just around environmental, social and governance investing, what it might mean conceptually, not necessarily talking about our products, but it does reference the MSCI screening process and methodology, which I think people would be quite interested in reading. So specifically with our product range, we've spoken about in the past our Acumen ESG protection portfolio, and I'd like to come on to that later on. But you mentioned quite rightly that actually it's beyond that. It's within our wider suite of products that we're incorporating ESG. within the Acumen portfolio range, the unprotected versions. We've talked about why we would want to do that. Can you just go into that a little bit more, James, as to why ESG focused investments have outperformed over the last few months, particularly during the downturn following the start of the coronavirus pandemic, and just what kind of tilts and factors, for example, ESG brings to a portfolio?
So this year, I think investors have really focused on the need for high quality company investments, and also looking to the country level as well. And our analysis shows that ESG, if you want to call it a factor, best aligns with a quality or a minimum volatility style investment. And this year, due to heightened volatility in markets for all sorts of reasons, it is the high quality, large companies that have tended to fare a little better throughout. And then also, you know, in response to the COVID-19 pandemic, governments have announced all sorts of large stimulus packages. Increasingly, they are green tinted. Not everywhere and not in entirety, but in combination with increasingly ambitious emissions targets that are being announced by China and the European Union, pretty much everywhere at a government and also at a company level, all of this fundamental, this macroeconomic tailwind has encouraged investors to prioritize, for example, clean energy investments. One of our real highlights this year, definitely the strongest position in our ESG themed products, has been I mentioned at the very start, the pure play, where you have the ESG filtering system, which leads you to a basket of, as I said, the high quality companies. You also then have the pure play. And this year, both of those baskets have performed remarkably well. And so I think this has been a really important year for those that were initially, or still might be, skeptical of the ESG ecosystem, but redefining it not as this crazy catch-all solution to all of the world's problems, but really just a focus on doing the simple things well, and an appreciation for macro trends in the future. That has been a winning combination this year, and in our ESG and non-ESG themed products.
Thank you. Great summary. And then turning attention to our ESG themed products. I mean, we have a unique product, the Acumen ESG Protection Portfolio. There's nothing else out there like it. It focuses on environmental, social, and governance factors with a 90% protection level, as does our capital protection portfolio. So, with that in mind, can you just elaborate a little bit on how that fund in particular works relative to the rest of the product range?
Yeah, so I mean, in makeup, the Acumen Capital Protection Portfolio and the Acumen ESG Protection Portfolio are essentially the same exact thing. The only difference is that the ESG Protection Portfolio adheres to the ESG investment policy. So that being the only difference, there are then several consequences of that difference. Namely, one is the basket of the actively managed basket of underlying holdings is different, to ensure adherence to the policy. Of the 17 holdings currently in the actively managed basket in the ESG protection portfolio, 13 are specifically ESG themed. The remaining, 4, early in the morning still, I suppose, adhere to the policy. So that is the real difference, and we are hoping for 17. It could be whatever number, 100% of the holdings in the ESG protection portfolio to be ESG themed in the future. We are present by the European exchange traded product and index space if there isn't a product to fill a specific gap. For example, sovereign bond ETFs, it is very difficult to determine what is and is not ESG. iShares by BlackRock actually released a product this week. UBS have one that we do allocate to already. But there are certain holes that are slowly being plugged, and these products are then improving in liquidity and increasing in size. And the hope is, as a result of the policy for the protection portfolio, the ESG protection portfolio, to be fully allocated to ESG themed products in the future. That's the first difference, the basket. And then as a consequence of the policy, the ESG data, the metrics, if you compare the ESG protection portfolio to the capital protection portfolio, or the Acumen portfolios, there is a distinct improvement in. We could look to the MSCI ESG rating that we point to in the policy. The ESG protection portfolio achieves a AA versus a BBB, i.e. 2 notches down. For the capital protection portfolio, that is a genuine improvement as a result of the policy. And we are actually increasingly looking at environmental metrics to pinpoint, where do we find the improvement from a carbon intensity point of view. So, the amount of carbon released into the atmosphere per million pounds of sales at an underlying level. We can really get into detail. And if we look at that metric, the ESG protection portfolio achieved around about a 40% improvement, i.e. a reduction in the weighted average carbon intensity of the underlying basket. We can also then look at, fossil fuel reserves, thermal coal reserves, and see there is a real improvement as a result of the policy. And that's what differentiates the ESG protection portfolio from the rest of the proposition.
Thank you. We could sit here and talk all day about this. I know you could, for sure. The level of detail that goes into building the product is significant, and it would be remiss of me, and nobody watching this would expect me to do anything other than point out that the Acumen ESG protection portfolio recently won an award. It won the Innovation Award at the Moneyfacts Life and Pensions Awards 2020, which is great. A true recognition of the innovative product that we have. Few words, couple of minutes on why you think we won the award.
Well, what is a pension, right? A pension is sustainability writ large. Preparing for the future is sustainability writ large. It would be irresponsible if the tool that you used to prepare for the future did not also, at its core, appreciate the importance of getting to that future sustainably. So I think just simply the combination of a genuine best-in-class focus on ESG as it evolves with a rather innovative capital protection mechanism means that it is quite tailor-made as a pension tool, but also more generally for those thinking about the future. It just seems to be a very logical marriage, and we were very lucky to be rewarded with this award.
Yeah, luck plays some part, but the harder you work, the luckier you get, someone once said. So I couldn't have put that any better myself, James. Very conscious of your time. Thank you ever so much for this morning. Really appreciate it. There's so much more to read and to look at. So anybody that's interested in learning a bit more about this, please, you know where I am. Feel free to reach out to me. Take a look at our Tavistock Wealth Library page and our website. Loads of information on there. And you'll certainly hear more from James in the coming weeks and months. So James, thank you very much. Appreciate your time.
Cheers.
And I'll talk to you soon. Thank you.
Thank you.